All right.
Hey, good evening, everybody. This is Andrew with A.L. Johnson Life Insurance Agency. Got a really exciting video for you today. I've got my brother here, Mr. Chris Dunlap. We're going to be discussing the new economy, cryptocurrency, the stock market, the way that it's been moving for the past year is unprecedented. We're also going to get into NFTs and just how you really can set up some financial wealth for your family. And so, Chris, how you doing this evening?
I'm good, man. Trying to fight this cold off, but I got my tea with my lemon and honey here, so it's going to help me through this. But I'm doing well. Thanks for having me.
Well, man, the weather ain't happening, and so for those of you that are in
Yeah.
Kansas City, today was crazy. Here we
Yeah.
are in April, end of April, getting ready to go into May, and you wake up to snow like it's Christmas, and by the middle of the day, it looks like nothing ever happened.
Nothing ever
So,
happened, right?
definitely. So, man, I'm just going to jump into it. There's a lot of people who are really excited about the content today, and I
Right.
don't blame them because when you look at the market and the returns that it's thrown out over the past year, it's been absolutely life changing. I mean,
Man.
life changing for a lot of people. You're seeing overnight millionaires left and right. We all see it, but a lot of us really just aren't privy to the information so that we understand it. And so you got a lot of people that are kind of scratching their head and they're looking back, and oh, if I would have took my income tax and
Yeah.
did this, or if I would have invested that. But you don't know what you don't know. And so that's exactly why we have these live streams here to really just give you the information and put it right in front of you. I do have to put a quick disclaimer because we are talking about investments. Do your own research.
Yes.
Do your own research. Chris and I, we both study the markets, and so we'll give you a lot of information, but it's up to you, to make that final decision. And so definitely, if you don't have one already, grab a pen and a pad. This is definitely going to be jam-packed full of information. And so let's just jump into it. Chris, when it comes to cryptocurrency and just that whole scene, we know Bitcoin, it was created in 2009. Here we are, 12 years later, and it's like one of the biggest investments to ever hit this earth. I mean, like the returns are astronomical. And so for a beginner, a complete newbie that has no idea what cryptocurrency is, in your own words, how would you explain it?
Cryptocurrency is simply a digital asset that can be exchanged for goods and services, just like a dollar bill or using a credit card. I think the thing that makes Bitcoin and other cryptocurrencies unique is the blockchain ledger. So it's a trustless platform, which means that I don't have to know you to trust you to send me money. The blockchain ledger does that for me. So if I send something that has to go through all of these checks and balances from different people in the community to know that it's a true transaction. So unlike, like a Venmo or a Cash App, you may be leery about sending before somebody sends you your product or whatever it may be. We don't have to worry about that as much with crypto. So I think that's one of the big reasons why Bitcoin is as huge as it is. And then secondly, you have community. You get a community behind it, a community of people, millions who believe that cryptocurrencies are the next natural phase from, going from cash to credit cards to, the cash apps and things like that. And now just moving completely digital, that's going to pump up a price of something also.
Absolutely. So let's back up just a little bit before we
All
get
right.
too deep here. How did you get into investing on your own?
Crypto or just period?
Just period.
Yeah. So I had about three things that happened in my life early on that were confirmation for me that I need to be doing this myself. The first, I was in an MBA program, and there was the market crash in 2007, 2008. And I went to my finance professor and I was like, hey, these are three stocks that, have crashed significantly, but I just think they're going to come back just because, one was Ford. It's an American staple. You can't let Ford die, right? And so I talked to him about these, gave him my reasoning, and he was just like, nope, I wouldn't touch it, wouldn't do it, right? We fast forward 6 months after that, stock shot right back up, went from like 84 cents to $12. And I was like, I missed out on a great opportunity from listening to someone else. The other thing that happened is, when you start jobs, that you work with financial advisors and they're excited, like, hey, we can work with you and we can put you in these funds and get you 5 to 6 to maybe 8% returns. And for me, right, I come from the school, the era of hustling to where you should be able to turn a dollar into two. So 5 to 8% returns just wasn't going to cut it for me. So I was like, nope, I'm gonna figure this thing out myself and figure out how to make my own money. So that was the second thing. And then, like I said, the third thing was just coming from a point of I want to be in control of my own destiny, right? And I was always the type of person that I'm gonna go figure it out myself. So the third piece was just putting that together. I want to be control my own destiny, and so I just got into investing for myself, diving into things about the stock markets, um, different, whether it's the stock market back then, crypto now, forex, anything you name, I've dabbled in to try to figure out.
That's good. That's good. And so, just like with real estate, there are different strategies,
Right.
to generate wealth. And so, there's the buy and hold strategy. You purchase a home, you rent it out. There's the fix and flip strategy. There's also different strategies when it comes to the stock market and investing.
Right.
And so, would you consider yourself to be a long-term buy and hold investor? Are you more on the short-term day trading, trading side of things?
Both. I'm
Both.
everything. Yeah. So
Okay.
my strategy, and I tell everybody that I talk to about, investing. So, and this may be a little deep, but I do stock options, and I use the money from stock options because stock options you can make money real fast, right? If
Right.
you
Right.
time things right. I take my money from stock options and I either put it in long-term holds in crypto or put it in long-term holds in dividend yielding stocks. So, my money works for me either way. Crypto is going to go up. I stake my crypto so I get returns. I put my long-term money in dividend yielding stock portfolio that also makes money for me. So I'm a little bit of both.
Got it, got it. And so, for those who may not be familiar with those terms, I'll just break those down really quick. And so, long term, you're just buying the stock and you're looking at a 10, 15, 20-year time
Yep.
horizon before you cash it out. A
Yep.
swing trade is essentially you betting on a stock. And so, it's not necessarily you purchasing and owning it, but it's you betting that a stock will move in a certain direction over a certain time period. And so, for a swing trade, you're looking at maybe a week, maybe a month tops, but a fairly short term. And then day trading, people are literally looking to make money, in the next 30 minutes, 20 minutes, an hour, 5 minutes even. That happens. And so options is a little bit different. I haven't played with options too much. I've done binary options,
Right.
which is kind of a, up or down within a certain time frame. And so you're betting that, Bitcoin's going to go up to this price within the next 5 minutes. And you can literally double your money in those transactions, but they are highly risky. And so
Yes.
it's not for someone who's brand new or doesn't have much of a risk tolerance. Is there anything that you wanted to add to that on the difference between the trading styles?
No, you hit the nail on the head. And the binary options is just the same with the stock options. And then, of course, now they have crypto options, right? You're just betting that a stock or crypto is going to hit a certain strike price before your options expire. And then, but the beauty of options is you don't really have to hold them to that expiration date. If you hit your profit that you want ahead of your expiration date, you can cash out at any time. So that's why I like options. I don't really have to, you don't have to hold them long term, but you can hold them long term to be on the safe side.
Got it. So we got the different types of investing. So let's kind of jump back to Bitcoin because I really
Yeah.
want to help people understand why the value is there. And so you explained it's really about the blockchain technology versus Bitcoin itself. It's just kind of introducing a new way of record keeping and
Yeah.
eliminating the trust factor between transactions. Now the reason, this is just some notes that I jotted down on why Bitcoin's price keeps going up because in 2009 when it was created, it was like an eighth of a penny.
Yeah.
And at the time of this recording, we're hovering between 56 and 57,000. And
Yeah.
so, literally, $100 investment back in 2009, you would be a multi-millionaire now. And there's absolutely no other investment on the planet that would have done that for you and your family. And so, I want to break down a little bit why. It's really about supply and demand. Okay, so um, the supply for Bitcoin is capped at 21 million. And so that's the most that will ever be created. There's an event that's called the halving,
Yep.
and that happens every 4 years. And so the reason that we had this huge run up from 2020 till present day is there was a halving May 11th of 2020. From that point, I think the price was somewhere between $3,000 and $5,000, and it's 10x within that time.
Right.
What the halving does, it actually decreases the supply of Bitcoin, and so it's built in. There's built-in scarcity, and
Yep.
so as time goes on, there's fewer and fewer Bitcoin available. And this year, they really got snatched up because a lot of mutual funds are being created, a lot of ETFs, and then you had Elon Musk with Tesla make a huge purchase. There's a lot of other corporations that are putting Bitcoin on their balance books, and so it's really just killing the supply. I was looking at a statistic here. It says that all 21 million of the Bitcoin will be mined by 2140. However, and this is really huge, if you have any interest in Bitcoin, pay attention to this last statement. More than 98% of all Bitcoin will be mined by 2030. And
Mm-hmm.
so 9 years from now, 98% of all the Bitcoin will be gone. And so you can only imagine what type of effect that'll have on the price. By 2030, they expect that only 420,000 Bitcoin will be left. And so, Chris, someone who's a little more seasoned in the crypto space, what do you feel or think when you hear that information?
I think it's beautiful. I think it's beautiful. I always told people that crypto, if done right, right? 'Cause there's a lot of scams out here. There's a lot of scam coins out here, but if you do the research and pick the right coin, I feel like crypto is the great equalizer. It's the only thing, like you said, that can take somebody who's working a job $10 an hour that can put a paycheck or two into a crypto and become a millionaire in a month or two or three. Now that's an exception, not the rule, right? So I don't want to get people to thinking like, oh, this is some get rich quick thing. But those numbers on Bitcoin, as you accumulate and you see that this price continues to go up 3, 4, 5, 600% every year or two, you can just see how great of an investment that could be, right? And Bitcoin is now considered a store of value, sort of like we look at gold. It's a long-term store of value, at least for myself and a lot of people that I know that really believe in it. I don't use my Bitcoin for anything. I don't sell it. I don't move it around, any of that. That is my store of value. And you touched on a good point with the scarcity, but I kind of want to back up a little bit because just like with any other currency, there's these 6 points of things that make them valuable, right? It's the durability, right? Like a dollar. Dollar's pretty durable. You may have to be rough with it in order to destroy your dollar. You can burn it. However, you can always replace it. So the dollar is considered durable. So is Bitcoin. It's digital. You can't break it. You can't tear it up. You can't set it on fire, right? The portability. Can I move around with large sums of currency in the form of Bitcoin? Absolutely. It's on your app, it's on a ledger, whatever it may be, it's on your phone. So that portability is there. Then we talked about the supply, limited supply. The scarcity really makes it valuable. And you can see with things like the dollar, what you realize is if we get in trouble, we just print more money, just like we've been doing with the stimulus packages and things. And as we print more money, the value of the dollar is going down. You can't print more Bitcoin. It may fluctuate from here to there, but as it starts stabilizing, what it does is it has what we call higher highs, which means it'll drop a little bit. But every time it finds this new support, that support is always higher than it was before. So it continues to gradually go up every time it tests and bounce back and forth. So those are some of the main points about why Bitcoin is so valuable. And then like that last piece, the community around it, there's millions of people that believe cryptocurrency is the future. And then now you have large institutions pouring billions of dollars into it. So it's not going anywhere because one thing that a hedge fund manager or a large ETF or someone like Goldman Sachs is not going to do is risk their money on something that's going to blow their fund up.
I wanted to touch on that too because the biggest fear or the biggest risk that I see with cryptocurrency in general is regulation.
Is regulation.
And so we've seen, I know Turkey, they ended up banning Bitcoin as a method of payment. There's a couple countries in Africa that have done the same. None of the major countries, though, where crypto is primarily bought and sold. Do you see any regulation potentially coming down the pipeline, or are you feeling pretty confident that with the major companies that are in the S&P 500 investing in Bitcoin, that they'll do their own lobbying to keep the gates open?
I think you're going to have a mix of both. I definitely believe there's going to be some regulation coming down because unfortunately you still have people in government that believe the rumors of Bitcoin from 10 years ago, 11 years ago, that it's used for unscrupulous characters to do illegal activity, right?
Even like cash isn't.
Exactly.
Right.
It's funny. My cousin said something real funny when people talk about that. He was like, anything that I've ever done illegal, I bought with cash, right? Never with Bitcoin. Right. But you still have people that have that argument. So I think there's going to be a little regulation. And as Bitcoin being a store of value, I believe some regulation is good because that's going to help with the volatility, right? Because You know, 4 or 5 years ago, Bitcoin could have went from 10,000 to $2, right? Just based off of whatever people want to do. But I think when that regulation comes, it's going to increase the stability of the coin, which is going to even make it more. It's going to give it more credibility. Secondly, I don't. You can't ban Bitcoin. Even the countries that have tried to ban Bitcoin, as long as there's decentralized exchanges and people have access to the internet and VPNs, they're going to be able to get around that and still be able to transact between, different exchanges, goods and services to get what they need. Because the countries like, Zimbabwe, Venezuela, and those that ban Bitcoin, they tried to because they wanted to bring their dollar and their currency inflation back down. But I'm not going to give you Bitcoin when my dollar has inflated 1,700%. I'm going to just move around for goods and services using cryptocurrency, and then there's going to be people that are going to accept that cryptocurrency because they understand the value of it. So I don't believe it's possible to ban it. To ban crypto, you almost have to shut down the entire internet.
So let's talk about inflation, because I think that's a piece that a lot of people overlook. So in this current environment, we're at our third stimulus. They're talking about, ongoing recurring payments or possibly a fourth stimulus. Can you just speak to inflation a little bit for those just may not understand how that all correlates?
Yeah, the more money you print, the more of anything that's in supply, the demand for it goes down and the value of it drops. And I have an example. I have some servers that I purchase, and they're offshore, and every month the price gets higher because the U.S. dollar value to the euro is dropping. So every month, let's say I'm supposed to be paying $50 a month for these servers, now I'm at $65 just because the dollar is so low against the euro right now. So the more we print, the less buying power we have per dollar. It may not seem like that. You just mean like, oh, store prices are going up or whatever it may be. It's requiring you to spend more dollars for the same thing because we have so much in circulation. I think it's a terrible thing, right? I understand we needed some things to stimulate the economy, but it has to stop at some point, because if hyperinflation happens again, we use Zimbabwe. When a dollar value drops by 1,700%, you're just going to have a stack of money that means nothing.
You'll be paying $20 for a gallon of milk.
Exactly. So It won't matter how much money you make, because it's still going to all even out. Your $1 million is only going to get you $100,000 worth of goods if hyperinflation occurs.
And that's another reason too why the stock market and these investments are really pumping like they are now, because when it comes down to it, the interest rates are so low, and so the way that banks make money, they take in the money that we deposit and then they loan it out at interest. Well, when interest rates are very low, that takes away the bank's profits. And so if you look at interest rates, if you look at the history of it, late 80s, you could go in and get a CD and get 5, 6, 7%, which is actually the historical return of the stock market. And so you didn't have to be very risky to keep up with inflation, which is usually pegged around 2 to 3%. And so now you have all of these wealthy people trying to beat inflation. Well, how do you beat inflation? Through investments. And so now we're seeing the stock market go through the roof, even though we've been in a pandemic and a lot of the valuations for these companies really aren't justified. They need somewhere to put money. The same reason that the cryptos are just pumping like crazy. They need somewhere to beat inflation. The housing market, same thing. So now you have these real estate investment trusts that are coming into inner city neighborhoods, buying up packages of homes because they're looking at a 15% return on those rentals. And so for us to be able to keep up, we have to follow the wealthy. And the only way for us to beat inflation and our dollar just, not decrease to a point where we need, again, $20 to buy a gallon of milk, we have to keep up with inflation through investing. And so that's why this live stream is so important. What would you say on that, just on the interest rate piece of it? Because I know the Federal Reserve, they've been going back and forth, and they've been saying, we're going to keep interest rates low for the next couple of years, and then they'll make a contradicting message, 2 or 3 days later. What are your thoughts on that?
Man, I think, the pandemic hitting was just something that was unprecedented. So I don't think, just like we didn't know what the heck COVID was for months, I feel like they don't know what they want to do because we never dealt with something like this. Keeping interest rates low may work for a couple of months, and then they realize they may need to raise those, right? Because they're trying to figure out how do we balance it out so we don't have hyperinflation also. So I just think we're in a situation that we've never been. Well, of course, we're in a situation we've never been in before, and we just don't know how to really handle it from that level. But to your point, the way for us to make sure that we don't sink in this is we have to have these type of conversations to continue to spread the knowledge and empower people on things like investing. So like you said, we can follow the rich and keep up with the rich, right? The rich don't get there by the ways we were taught, right? Work hard, get a good job, and stay there forever. Now, don't get me wrong. There's some sectors, right? Software sales, tech, high tech sector, where you can work for a company, make 300,000-400,000 a year, and get rich from working a 9 to 5. But the
Right.
majority of roles are not like that. So in order for us to offset that or to keep up and get out of lower middle class, get up to upper middle, upper class, is through investing, right? And it's following the money, just like anything else. If it's a crime, you follow the money. If you're trying to get to somebody's level, follow the money. And so that's kind of the way that I do things. I look at large hedge funds and ETFs and things, and I see what are they investing in, and then I try to understand why are they investing in it. And then, of course, I do my own research on if this is something that I want to jump into also. But I also got to have a reason behind it
Right.
for me investing in something. Because if I'm just doing it because it's the hot thing to do, I don't know when to pull out of this investment. And that's how
That's
I lose
yeah.
everything.
That's what leads to my next question. So we just saw Dogecoin. Everybody's talking about Dogecoin. We saw it rally. I believe it was 20 to 30% in like one day, and then it retraced all of that the very next day. And so, can you speak to um, the uninformed investor that is just reading headlines and then blindly investing? What word of caution would you have for them?
Whether you're just reading headlines or just getting into it, I think the same word of caution is going to be there. Only invest what you are willing to lose, because at the end of the day, no matter how much technical analysis, and what that is just looking at charts and trying to find pattern, looking at historical patterns to predict future events. No matter how much of that you do, at the end of the day, there's still going to be that chance that things can reverse on you. So only invest what you are willing to lose.
Most definitely, most definitely. And I always say this, just as a rule of thumb for me, if I see something shoot up 20, 30%, I just look at it like I missed that move.
Yeah. Yeah.
So sometimes you have to just be okay with letting that moment pass, because nothing goes up forever. It's likely to retrace and come back to a similar point where you can buy in, but definitely you don't want to chase trades, or you don't want to chase investments. That's an
Yeah.
easy way to lose your money.
Yeah, for sure. Never chase a rocket. But I think the only difference is that's yes for stocks, right? Most of them will go up and retrace to a point where you can buy in, but crypto is a little different. Once crypto really gets to and it tests a strong support, it typically has higher highs. Like even Dogecoin, right? Um, Now, if I was a new investor and I was doing research, that may have been one that I would have gambled on just because it's an OG coin, right? It's not
Yeah.
like it's some fly by night coin like a lot of these other ones. It's an OG coin. So I probably would have said, yeah, put a little bit on that one. It's been around forever. It's one of the ones that survived, the crypto winter over the last 3-4 years. So I would probably jump into that. But even with that one, pumping as much as it did, personally, I think we now see higher highs with Dogecoin. I think it's going to stay above 20 cent now. It may not go to 5 or 10 to $20, but I think
Right.
that cent range is probably going to be the low we see it. I don't think we're ever
Yeah.
going to get back down to that fraction of a penny, just because there's too many people invested in it now, and too many people that have hope to hold out for it to rise.
Now, how do you view potential upside for these coins? Now, the way that I look at it, I look at the coin market cap,
Yep.
and I just try to see if it's realistic. Say for Doge to go from 30 cents to $5, it would have to be the combined wealth of the whole S&P, the
Yeah.
Nas 100, and every indice that we have combined. And so the realism of that is very slim to none. And so, can you just kind of speak to how to evaluate market cap, so that when a person is looking at a new coin, they know if it's realistic to realize certain returns?
Yeah. The market cap is the number of coins in circulation times the current price. So that gives you the market cap. And so let's say, for instance, a coin has $1 billion market cap and it's only a fraction of a cent. And people are saying this coin is going to get to $100. Well, for that to get to $100, that means we're going to have to pump in a couple trillion into this coin. Now, again, that's typically the rule of it. However, Dogecoin was never supposed to get this high because of this market cap, because it's an unlimited supply. But when you have a government pumping $3 trillion over a year into the economy, anything is possible, right? I believe if we didn't have as much money pumped in, I don't see Dogecoin getting this high because
Right.
it was never really supposed to get above 10 cents. But we just had all this free money. People were like, where can I invest this? Where can I do something? We missed the train every time crypto spikes up, Bitcoin's out of control. Even for some, Ethereum's a little too high. What can I do? And I think the money being pumped into the economy really helped with Dogecoin's case. But in most cases, you definitely want to look at that market cap, and that's going to be one of your truest indicators.
Got it, got it. And another thing, because that makes me, that kind of leads into the altcoin conversation. And so percentage return really means a lot. And so when you're looking at Bitcoin, and there's all types of predictions, Bitcoin going to 1,000,000, 200,000, 100,000 by the end of the year. These are just predictions. We don't really know what's going to happen. But when it comes to the percentage return, that's what has made the altcoins very attractive. Because
Yes.
when you have a coin that's 10 cents a coin, and it actually has room to grow from a market cap perspective, you can get much higher returns that way. And so, are there any altcoins that you are particularly fond of?
Yeah, I have a pretty diverse crypto portfolio, and you make a great point. I think a lot of times when people look at it, they look at the dollar movement, but again, you can put $10 in a coin that's 10 cent, and if it moves to 20 cent, you just doubled your money,
Right.
right? And there's a lot of those that have that potential. So for me, like
And I'm gonna pause you there too, just for nobody that maybe just didn't catch that. So that literally means if you put $100 into Bitcoin right now, for you to double your money, it has to get almost to 120,000.
yeah, for sure. But you could put your money somewhere else that still has a lot of potential. Like I know Ripple's delisted right now, but let's say, Ripple's all-time high is around $4. Right now it's hovering at like 126. We know it's a coin that people like. They just went through some SEC situations, right?
Right.
So if they beat that case, they have upside because we know they can get back to that $4. So $100 in there, you're turning that into $400 for doing nothing just because of the upside that it has. But for me, I like coins like Tizo. I like the Graph. I like Cello, however you pronounce it.
I also
Um,
got a little static. I think we got that static again that was coming through.
I'm not sure. I haven't done anything differently. I'm not sure, man. Sorry about that.
No, no, no problem, no problem. But I believe what you were saying is the percentage return. And so Ripple, they just had an SEC lawsuit and they were delisted from Coinbase, which was a major exchange. And so you could hold Ripple, but you couldn't trade it. And
Yeah,
so the price like completely plummeted. And while you saw all of the other cryptos skyrocketing, XRP was just kind of held and
right.
suppressed, and it's still in that state now. If that SEC lawsuit completely goes away, there's a very good potential that you could 3 to 4x your money based off of the previous high.
Yeah, yeah. Because Ripple has a good white paper and a use case. They were built to be the new Swift. Swift is for like wire transfers between large institutions.
Right,
That's what Ripple was built for, to be the cryptocurrency, a blockchain for large institutions to trade money back and forth. And so the SEC, some of the lawsuit was saying that, hey, they were using this for money laundering, right? But if they beat that, I could see Ripple definitely getting back into circulation and having some use cases. But when I look at altcoins, I look at altcoins from a standpoint of how long have they really been around? What is their project, right? What is their product roadmap? What are they trying to do that's different from today other than just hype? Because there's a lot that are just like Ponzi schemes and hyping up. And
yep,
then I look at where are they listed and if they have staking availability. And for people that don't know, staking is just like I said, I like to invest in dividend paying stocks. And what that means is if I hold a stock, a lot of stock pay dividends to their shareholders, which means you get money just for holding certain stocks. Same thing happens in crypto, staking rewards. By setting your crypto and just sitting in there and not moving it, you stake additional crypto. You're either paid out in that crypto or you're paid out in dollars for things. So for things for me like Ethereum, Bitcoin, Litecoin, those things that I don't touch, I just add to and accumulate. I stake those, so I accumulate by by buying into them, as well as getting free fractional shares of those crypto investments by doing staking rewards.
Yeah, those staking rewards are pretty generous. I know
Yeah,
Tezos, I think it's around 4.5%. I've seen, I think Ethereum too. If you stake it on Gemini, I believe they're paying almost 7%, 7 to 8%,
yeah,
which is beautiful. And so when we talked about interest rates earlier, you have to again realize why smart money, or the wealthy are piling into cryptocurrencies,
yeah,
because when you can get, 1980, 1990 market returns safely, there's no reason for you to be at risk. And so
right.
that's awesome. That's awesome. So you like Ripple. What do you think about Theta? Have you checked out Theta?
I haven't checked out Theta. No, I've heard of it, but I never dug into it. You know, with crypto, you can really get spread thin, right? There's
Yeah.
9,000 cryptocurrencies out there.
Right.
So it's impossible to know about every single one of them, right?
Hmm.
Uh, so for me, I have a handful. I have about 14 that I'm really solid on, but I don't hold any Theta.
Got
Um,
it.
yeah, don't have any Theta. But another one that's up and coming that I'm really strong and bullish on is called Kucoin. Um,
Yeah.
they remind me of Binance Coin because they're a coin that most cryptocurrencies are built upon like Ethereum, right? Of their own tokens, where like Binance and Kucoin are coins that are associated with their own exchanges. And
Right.
typically with those, just following how Kucoin is looking a lot like Binance did in its early years, it just has a ton of potential. I mean, Binance went from $9 two years ago to hovering at $500 right now, and I see KuCoin having that same trajectory. And on top of that, the staking rewards are pretty high, right? You get
Right.
13, 14% for staking KuCoin. So that's another one that I'm really strong on too.
Got it, got it. And for those of you that want to do research on coins, write down the term white paper if you're unfamiliar with it. That's what the cryptocurrency companies that are actually producing these coins come out with to let you know what the project is all about.
Yeah,
And that gives you an idea of the longevity. It's the same way that you would research, stocks and looking at SEC filings, et cetera. With crypto, you want to look at the white paper. And so if you're interested in any particular crypto, just Google, say Ripple white paper, and then that'll give you all of the information on how it works and what to look forward to. So that's a good one. So we covered XRP, Ethereum, Litecoin. Let's talk a little bit about the stock market. So when COVID hit in March, uh, stock market just tanked, completely tanked within like 2 or 3 weeks. It was very quick, but we literally did have that V-shaped recovery that
yeah.
they kind of talked about. What do you think that was attributed to?
Again, a couple of things. I think some of it was, the government putting trust back to the people by pumping dollars into it, right? The talk of a vaccine, I think, contributed to it. And then, once you get to a certain point, like we've been in this over a year, by the 6 month mark, people had cabin fever and they was ready to get back out and start spending money, regardless of what the risks were. Right? We're not designed to be caged down. So I think that helped with it also. And then I think people saw it as a great time. Like for me, I was posting a lot of plays like, hey, the stock market is crushed, but it's on sale. We've gone through this before in our lifetime. We've gone through this in 2008. So do some research on stocks that do well coming out of, things like this and going into recovery and start buying those up. And I think a lot of people took advantage of the stock market sale and start pumping money into it. So I think that really helped with that V-shaped recovery. And then as we slowly started opening things back up, money started getting pumped in from the government. It all helped with it.
Yeah,
Now,
definitely. Go ahead.
now personally, and I may upset some people that are in the stock market, but for me personally, I feel like we're kind of overbought in the stock market. I think we're artificially propped up again because we have $300 magically appear in the stock market. $3 trillion
Right.
magically appear in the stock market. So I think we're a little oversold. So again, when we say follow the money and follow the rich, this is a time where I will really start paying attention to who's moving money where, who's selling off large stakes of stock, and start understanding, okay, there's going to be some shift coming. I think it will be some shift coming here in the next year or so because we can't keep this pace up.
And for those of you that are unfamiliar, so a little earlier we mentioned the word options. I think this is like the perfect scenario for that. This is when that comes in. And so if you're holding stock and we're in a down market, we're in a bear market, you're just losing money.
Yeah.
Buying options allows you to profit off of the downward move. And
Yeah.
so it's really kind of hedging your risk until the market returns. And so that's why you hear a lot about options trading right now. Um, for someone who's like wanting to get into options, can you just kind of explain the process and maybe some of the platforms that are good to use?
Yeah. So I know a lot of people love Robinhood, right? Robinhood's cool. It's user friendly. So for people that are really new and to get into the stock market, it's okay to do that. However, you got to understand a couple of things. Robinhood charges a premium, and then Robinhood is really like a overlay of the larger market. So they have a delay in their updating of their prices. So you may be trading on Robinhood, but you're 4 or 5, maybe 10 minutes behind the rest of the market. So by the time you get a trade executed, you're already losing. So for getting stock starting, that's fine. But if you want to get into things like options trading, I tell people start with TD Ameritrade, Thinkorswim. It allows you to do paper trading, and what that is like simulated trading on the stock market. Until you really understand what you're doing, so that way you're not jumping into it losing your money. You get into it, you get you some wins, do you some research, really understand what you're doing in the market, whether you have a handful of stocks that you pay attention to. But I would start with paper trading, and then from there you can move on to live TD Ameritrade. Fidelity has options. Webull is another app that allows for options. So there's tons of things out there, but before you get into anything, test your
Yeah,
theories. You think you got it, test it another 100 times before you jumping into it, because I've seen a lot of people get lucky and think they know what they're doing, and then everything's crashing on them. So we don't want anyone to run into those type of situations. Um, and if you like, after this call, I have a few pieces of information that I could send out around stocks, what they are, really understanding the stock market and how do you invest in stocks, stock options, as well as cryptocurrency, so we can share some of that information to people that are interested.
definitely. We'll make sure we get that out. We got a question here from Melvin Brown. He says, "Is this still a good time to buy into stocks or no?" I'll just answer that as there's never a real definitive answer on that. My personal opinion, I'm kind of leaning towards the bearish side. I think that we will see some downward momentum, but I think this is a good time to bring up dollar cost averaging. Um,
Good point. I was just about to say that. Yeah.
Right. And so, dollar cost averaging is just a simple method of investing where you invest a little bit over time, systematically, whether the market is up or down, because it's really, really tough to pinpoint the exact direction of the market. And so, as long as you're consistently investing, in general, history tells you that it'll work itself out.
Yeah.
What are your thoughts on dollar cost averaging?
No, I love it. I do dollar cost averaging all the time. I drip money into my crypto and my stocks weekly. So if it's up, I may overpay, but if it's down, I'm getting a steal. And like you said, it averages out. So if one week I'm paying $1,000, something's $1,000, and then the next week it's $1, I'm really paying $500 for that. So that's why dollar cost averaging is really good. It's all about the average cost of what you're paying for something. And to answer the question, yeah, it's definitely still a good time to invest in the stock market, because the stock market is really what makes America run, what really makes the world run. So even if we have a slight correction like we did back in March with the pandemic, which was just something so unprecedented, we recovered pretty fast from that pandemic. So I wouldn't deter anyone from investing in the stock market. It's definitely something I would still say do. Just make sure that you have your expectations. Again, don't get into it thinking that it's going to continue to like shoot up exponentially. And you also have to understand that there's going to be some times where your stocks are going to go down. Companies are going to perform badly. They're going to miss earnings, and stocks and people in the sentiment's going to change around those companies. People are going to sell off, and so they're going to dip. Then the next time they have a good performance or come out with a new product, the stock's going to go back up. So if you're a long-term investor and you're investing because you want a long horizon, like, retirement funding, definitely invest in the stock market. Invest in individual stocks, look at ETFs, look at dividend portfolios, and kind of diversify out there. You want to have some mixed risks, some things that are not very risky, but you're going to also have to take a few risks if you really want some high yields. But I would never deter anyone from investing in the stock market. Just know what you're getting into.
Most definitely. Now, can you speak a little bit to I would just call it investor stomach. Like, you got to have a strong stomach to be an investor. A mistake that I made several times early on was I would invest in a stock or even a crypto, and it would be going up, and I'm like, man, this is great. I wouldn't cash out because I just feel like it's going to keep going up, and then it would reverse on me. And as soon as I go in the red, there's just this fear of loss that would make me completely cut the trade and realize the loss versus it just being on paper. And so can you talk about paper losses versus realized losses and just the psychology of holding on to an asset, even though it may be, in its downward cycle?
Yeah. So I'll take it a step further. So that's a great point as far as realized losses and realized gains. What that means is you may look at your portfolio and it can be up 100%, but until you sell it, you're really not up.
Right.
Same with losses. You can be down 50%, but until you sell it, you haven't lost anything, right? And it's always has time to recover either way. If you don't have a high risk tolerance or an investor's stomach to really deal with the wide swings, there's things you can set called sell limits and stop losses. A sell limit means if I hold a stock or a crypto and I just want to get 10% gains, soon as it gets 10%, it's going to trigger a sale and you realize your value. You realize your profits. Or if you're like, hey, I'm not sure about this, I can't risk it all to lose, so I'm going to set a stop loss. If it drops 10, 15, 20%, whatever you're comfortable with, it'll trigger it to sell off. So that way you're not really losing a ton. So I would always say have those in place too. Again, unless it's something you believe in. Like for Bitcoin, I didn't have a stop loss for Bitcoin. I didn't have a sell limit for Bitcoin because I believed in it. So I went in on it and I just let it ride, for the last 6 years. Same with Ethereum, same with Litecoin and a few other coins that I own. I didn't have those. I didn't panic when the market crashed because, like I said, I had my belief that it was going to turn around, and it worked out in my favor.
That's awesome. And that had to be, so if you were in 2016, you were a part of the drop from 20,000 to 3,000.
I was.
Woo.
I was. However,
right.
However, it never affected me because I got in under 3,000. So I had a bigger tolerance than most people because I got into the game early. So for me, it had to go well below what it dropped to for me to feel hurt, right? So, but even still, it still was a sting to be like, yo, I could have cashed out at 20, and now look at it. But what I did,
I
just stopped looking at it. Just put it behind me and said, I'm not going to worry about it. It's a long-term investment, so I'm not going to look at it every day like people panicking. And unfortunately, I have friends that did that. I have friends that got in, and it went to a certain point, it dropped below what they paid for it, and they sold, like you said, the investor stomach, and they sold in the red. And now looking back, 60,000, 50,000, it's like, I tried to tell you, just hold on. But everybody can't do that.
So investing is a lot about mentality and psychology, really more than anything. And so how have you developed this such a strong mindset to allow you to look long term? Because we're in a microwave society. Everything is quick, fast right now. We're seeing all these headlines, person invested 100,000, today and became a millionaire 30 days later. And so how do you keep your wits about you?
Yeah, and I think those stories really damage the market more than they do good, because a lot of people, sometimes they'll go all in and lose everything. Like you look at the GameStop hype and everything, people buying at the wrong time, and then they get burned. And I hate to see that for people because I feel like, again, crypto and the stock market is the only way we're going to really catch up from those 400 years that we were behind. And so I really hate to see people get burned. But for me, for one, I take calculated risk, right? I don't just jump into anything blindly. I really make sure that I take very calculated risk on the things that I do. And then for anything that I'm unsure of, like I said, I have those stop losses in place for things that I'm unsure of. But if it's something that I believe in, I'm going for it. Like if I wear Nike every day, and I know there's millions of other people that wear Nike every day, I'm going to invest in Nike and be okay. And I'm not going to worry about the stock going down from time to time because it's something that I believe in, right?
Right, right.
And I think that's the thing. It's really just my belief in the product that I'm investing in. If I don't believe it, I'm not going to invest in it anyway.
So you're not just chasing returns. This guy made 30%, so now you're chasing right behind him because of the
No,
30%.
no. When I first got in the game, I did some of that, and it only took me once or twice getting burned. Like, hey, man, I'm buying at the top, right?
Exactly. Right.
There's phases of it. You have accumulation phase where the big boys are accumulating. Then you have the phases where the middlemen, the brokers, are shooting the price up, and then you have us, which are the retail people that really get in up here, and we're buying too late.
Yeah.
And I had that happen a couple of times, and then I was like, let me just take a step back here. I'm not going to chase any other rockets. I'm going to try my best to see, is the data telling me that this stock is going to come back down to a price point that's manageable for me, to where I'm going to have some upside. And
Uh,
so I think it's just all about the fundamentals, right? It's just like anything else. Sports, you got to have fundamentals. You can't just go out there out the gate without having the fundamentals down pack and think you're going to be great at it. So I think my mentality is just the fundamentals of it all, and then just realizing at the end of the day, it's not the end of the world, right? Money comes and goes. People blow money on worse things, right? It's 420. There's a lot of money going up in smoke right now that can be going into investings. And so I look at it like that, like, where else would I have put this money if I didn't invest it? And I'd rather take that risk reward, because the risk reward is going to be much higher, me putting it in crypto or putting it in the stock market, than going out to the club and blowing it on bottles.
Man, man. And so that's another thing too. Like, what do you think it is within our community? I know there's a bunch of different issues, but what do you feel it is within our community that we don't take the time to learn these things? Because myself included, I've missed out on probably millions of dollars, easy money, from just not having the information soon enough. And we've got Google, and so it's all there.
Yeah.
What do you think it is about the mindset when we really are pursuing this information?
Yeah, so I don't want anyone to get upset with me. So I'm just going to say that this is a very general statement, right? I don't know anybody's situation. So this is a very blanketed statement. And I don't think it's just our community. I think it's across the board of people that are at a certain level in life. The culture is, you got to have it now. Everything that we see is like almost microwave, right? We think people are overnight successes. We think whatever it may be. We have culture where people talk down on you if you don't have the latest and greatest thing. So instead of trying to put money away and invest for the future, we rather put it in things that make us feel good about ourselves today, like a Gucci belt or whatever it may be, or a car with an overinflated car payment that's depreciating. So I think it's just some of those things of the way that the culture itself has been taught. And I call it, it's the hip hop culture, right? And I
Yeah,
just, that's the way that we've been taught, that we have to look the part, or we're going to get bashed for not looking the part. And I think until we get comfortable in ourselves to not worry about that and be like, listen, I don't care what people think about me, what I have, what I don't have. I'm putting away a nest egg, and I'm okay with sacrificing a little today to live how I want to tomorrow. Until we get to that point, I think we're going to always have people that just don't want to take the time to learn it, right? And just want to be like, it didn't happen overnight, so I ain't gonna do it.
man, you summed that up beautifully. I agree 100%. Um, last little segment here, because I definitely want to be respectful of your time. But you talked about how when you first got started, it was based off of you knowing, I can invest in my 401k. These are the expected returns, and so I think I could do better myself.
Yeah.
Um, do you have like an annual target, or for someone who says, maybe I want to manage my own money? Like, what's a realistic target for someone in that position?
Man, I think it's gonna be different for everybody. Like for me, like I said, if I couldn't turn a dollar into two or close, it didn't make sense for me to work with a broker who was going to also take a fee out of my money and still not get me anywhere close.
Right.
So I'm aggressive. I'm an aggressive investor. If I'm not doing 30 to 40 and higher percent annually, I feel like I'm not doing something right. You know what I mean? So um, but I'm also in high growth things. I'm heavy on tech, right? And then when different regimes come in and different presidencies come in, you got to understand what are they into? Like, what do Republicans lean towards? What do Democrats lean towards? And then you have to reshuffle your
Yeah.
deck a little bit to understand what your rewards are going to be. And it's interesting. You'll actually see, right? When Republicans are in stock, big business does well, oil doesn't do so well, whatever it may be. Democrats come back in. I'm sorry, oil does a little
Right,
better.
right. Mhm.
Yeah, Democrats come in, then it's more let's save the planet. So you start looking at things like electric vehicles and
Yeah.
hydrogen power companies, and you'll get great returns because those companies have been under the radar for like last 4 years, just kind of hiding because that wasn't on the plan of this certain party. So there's a lot that can go into really making sure that you get great returns on the stock market. But again, for myself, I'm super aggressive. For somebody new coming into it, as long as you're on par with like the Dow or the S&P, maybe the S&P because they're a little higher. They're typically 15 to 17% annual. As long as you're on par, a little better with that, you're going to outpace most funds that a broker is going to bring to you to help you with. So, but I think that's good. 15% annually that's a pretty good return.
Right. And then, of course, there's a whole different risk in, purchasing individual stocks versus, say, a
Absolutely.
mutual fund where you've got that mix of stocks. One way that I found, a couple of gems is like tearing apart a company and seeing what's behind the manufacturing. And so,
Yeah.
like we we're talking about clean energy, hydrogen is like a really big component in the manufacturing of some of the electric vehicles. And so there are companies that produce, green hydrogen, blue hydrogen, and gray hydrogen, and they're all competing for which one
Yeah.
is going to be the most clean and efficient. And so, you can bet on that race. And with the Biden administration really backing clean energy, that's something that may look good here over the next several years.
Yeah.
For someone who doesn't have the risk tolerance for, say, an individual stock, one easy solution would be a mutual fund, which everybody is fairly familiar with. It's just a group of companies in a
Yeah.
basket, and it's just averaging out your returns, and that's what most people's 401k is. Can you speak to ETFs and how that may actually increase the return because it's narrowed down to a specific sector? Kind of along those lines.
Yeah, yeah. So you touched on it. Mutual funds give you exposure to pretty much the entire market, depending on what it is. Where ETFs, like you mentioned, are very, very focused, um, um, like a tech sector, right? Or if you want a green sector, right? You can focus on an ETF that's only has companies in their portfolio that are from that sector. But again, for me, when I'm looking at these, they have to pay dividends. I'm not going to sit my money anywhere where my money's not going to be working for me, right? And I'm not going to sit it like a savings account or checking account. That's probably the worst thing you do with your money unless you just need liquidity because it doesn't do anything for you. So any funds that I'm looking at, any stock that I'm looking at, they have to pay me dividends or I'm not going to invest in it. They either have to pay dividends or they have to be somebody that has a crazy trajectory like Tesla was,
Yeah,
right?
yeah,
And you brought up another good point about breaking down the components behind it. So when you think about the crypto market, right? Crypto market is to get crypto, you can either buy it or you can mine it. And mining is done by computers, right? So you can look at computers have to go into this in order for Bitcoin to go up. So as Bitcoin goes up, so does the value of these companies like Nvidia, right, or AMD, the companies that make the computer components, right? So you can also look at these different things. So if you want to have a balance of crypto and the stock market, look at the components that go into mining crypto, and then start with that as your portfolio if that's where you want to lean to it. So that's just one example. There's tons of other examples to go off also.
definitely. I really, I hope people watch this broadcast and really take notes. There was a lot of game in this broadcast that people pay for. And so for it to be brought to you for free is amazing. Definitely appreciate you taking out your time, Chris. For anybody who's watching and maybe they want to contact you and ask you a question or two, or if they wanted to get a copy of the manual that you created, how can they get in contact with you?
And just hit me up on Facebook. I answered DMs and everything, man. I'm very accessible. So yeah, just hit me up on Facebook because, like I said, I think we all need to have some exposure to some investing, and we also need to pass this down to generations below us and have them pass it down to generations below them so we can catch up in the rat race.
Absolutely, absolutely. Well, again, this is Chris Dunlap, brilliant brother. We're really excited to have him on. And of course, I'm A.L. Johnson with A.L. Johnson Life Insurance Agency. Listen, if you or your family needs help with their life insurance, keep us in mind. It's all about generational wealth. And so that's why we have these conversations. I try to bring on a different business owner or someone who's an expert at a topic every single week so that we can get more knowledge to improve our financial situation and eventually leave some type of generational wealth behind for the next generation. And so, keep looking for our page for updates and for the next broadcast, because we're going to keep bringing you good quality information. And so, everyone, thanks for tuning in. If you have additional questions or if you want to watch the replay, you can catch that here on my page, the A.L. Johnson Life Insurance Agency page, or you can find A.L. Johnson Life Insurance Agency on YouTube. Thanks for
Cool.
joining us. Have a good evening.
Peace. Thanks.